Stock futures are holding steady after hopes for an interest rate cut propelled the market to new record highs. Here's the latest update you don't want to miss. But here's where it gets controversial. Despite inflation data coming in slightly hotter than expected, investors are betting the Federal Reserve will still ease rates soon. And this is the part most people miss about the market's reaction. On Thursday, a trader was seen working on the bustling floor of the New York Stock Exchange, a scene that reflects the market's current cautious optimism. Overnight trading on Thursday showed little movement in stock futures, after the major indexes surged to fresh all-time highs earlier in the day. This rally was largely driven by investors interpreting signs of a weakening labor market and moderate inflation as signals that the Fed is likely to cut interest rates at its upcoming meeting. Futures tied to the Dow Jones Industrial Average remained flat, while those linked to the S&P 500 and Nasdaq 100 also hovered near unchanged levels. This calm in futures trading followed a strong session where the Dow soared by more than 600 points. The S&P 500 climbed 0.9% and the tech-heavy Nasdaq Composite rose 0.7%. Impressively, all three benchmarks closed at record highs, with the Dow surpassing the 46,000 mark for the very first time, a milestone that underscores the market's bullish sentiment. Digging into the economic data, the Consumer Price Index, CPI, for August showed a month-over-month increase of 0.4%, slightly above the 0.3% rise economists had forecasted. On an annual basis, the CPI rose 2.9%, which was exactly in line with expectations. While inflation is a key factor the Fed watches closely, this report was somewhat overshadowed by the weekly jobless claims data, which revealed a surprising jump to the highest level since October 2021. Specifically, the number of workers filing for unemployment benefits for the week ending September 6 increased by 27,000 to a total of 263,000, well above the anticipated 235,000. Seema Shah, the chief global strategist at Principal Asset Management, summed it up well. Today's CPI report has been trumped by the jobless claims report. While the CPI is a bit hotter than expected, it won't cause the Fed to hesitate when announcing a rate cut next week. In fact, the rise in jobless claims might actually push the Fed to act more urgently, with Chair Jerome Powell likely to hint at a series of rate cuts ahead. Looking at market expectations, futures markets are almost certain to price in a quarter-point rate cut at the conclusion of the Federal Reserve's September 17th meeting, according to the CME FedWatch tool. This reflects a strong consensus among investors that the Fed will pivot to easing monetary policy soon. For the week so far, all three major indexes have gained roughly 1.6%. The S&P 500 is on track for its best weekly performance since early August and is marking its fifth positive week out of the last six. The Nasdaq is poised for its second consecutive winning week, while the Dow is set to record its first positive week in 3. In after-hours trading, several companies made notable moves. Adobe's shares jumped nearly 3% after the design software giant reported fiscal third-quarter earnings that exceeded analysts' expectations, signaling strong business momentum. RH, the luxury furniture retailer, saw its shares fall 6% following a quarterly revenue miss, highlighting the challenges some consumer sectors still face. Supermicro Computer, an AI technology firm, announced it has started volume shipments of its NVIDIA Blackwell Ultra solutions globally, which boosted its shares by over 4% in extended trading. Looking ahead, the major averages appear set to close the week on a high note. The S&P 500 is up 1.63% week to date, aiming for its best weekly gain since August 8th, when it rose 2.43%, and marking its fifth positive week in 6. The Dow has gained 1.56% week to date, on pace for its first positive week in 3. The Nasdaq is up 1.58% week to date, targeting its best weekly performance since August 8th, when it surged 3.87% and its second winning week in a row. So what do you think? Is the market's optimism about rate cuts justified despite the hotter-than-expected inflation data? Or are investors overlooking potential risks in the labor market and inflation trends? Share your thoughts below. Do you agree with the Fed's likely path, or do you see a different scenario unfolding? This debate is far from settled, and your perspective could shed new light on what's next for the markets.